Have you ever considered putting a little apartment over your garage? Today we will check in with one seacoast town to see how they're handling this dilemma. Also on today's show, the latest iBuyer update from Zillow and the popularity of in-person closings. Let's cut to the chase with Jen and Dan.
Welcome to Cut to the Chase with Jen and Dan. My name is Dan Ferullo and my co-host Jennifer Freed. Thank you so much for tuning in today. How are you today, Jen?
Much better. Had a little time off with some family stuff last time, so thanks for going solo.
Hey, anytime.
So lots of feedback. Tell Dan how awesome he was on his Facebook Live yesterday. I loved it. I checked it out. I thought it was great. So
we did get one comment from a listener who watched the video, and she actually told me, here, I'll actually read out her comment, just because I thought it was really interesting. So I did, as you know, if you were watching, we were talking about haunted houses, and with Halloween being, well, it's actually tomorrow, but when this comes out, it will be last week. So she said she lived in 2 haunted houses. Her family home had a ghost named Alice. Her mom saw her often after they unearthed her gravestone in their backyard,
Wow.
Which is pretty crazy. And then the second one was a rental apartment in a large antique home once owned by a New England ship's captain. She said she heard footsteps in the upper rooms and felt a ghost touch her bedsheet one night, which prompted her to move out a week later.
that might do it for me.
I think that would scare me a little bit too. I'd probably have to jump out and say break the lease, even if I had to pay a penalty for it. But thank you so much. Thank you so much, Carol, for commenting. I really, really appreciate that.
No tricks in this episode.
No tricks in this episode. All right, so jumping into this week's episode, or this week's articles, Kittery, Maine passes a new accessory dwelling ordinance with a 30-day rental minimum. So Jen, let's hear a little, why don't you tell us a little bit about that?
So we have this new phrase, accessory dwelling unit, which basically means, let's say you have an apartment over your garage, a little convenience type thing. It used to be renting these out was no big deal, but each town has rules about rental units, especially rental units attached to single family homes. So along comes Airbnb, which is great as a little side source of income, or let's say you travel a lot for work and want to utilize, your home that's not being utilized. Great option for those folks. For your neighbors, depending on who's rented your Airbnb, they might not like that so much. That's one side of the coin. The other side of the coin is rents are getting really expensive, even on really tiny apartments, and not just in Manhattan, but on the seacoast here and in other towns. So these accessory dwelling units are a great way to rent a small place for not as much money as a more standard size apartment. So it fixes a lot of availability of affordable apartments. It solves a good problem. But the big debate is, how are we going to make rules around these things so that they're not all Airbnb, or we do have accessibility for people? How does each town feel about that? Kind of polarizing, and Kittery just made some rules about that.
They did. So Kittery actually just enacted this ordinance, which is designed to encourage more development of ADUs as an affordable housing option. However, they're including a 30-day rental minimum. So this means you can rent out your apartment over your garage, or you can build an apartment attached to your home, and you can rent it out. However, you have to rent it out for at least 30 days. So there has to be, so you can't do weekends, you can't do, a week long in the summer, which, Kittery certainly is a touristy town, but it kind of goes on to say in the article that they're trying to get more affordable housing for people who can't, because in Kittery, I guess 90%, or I'm sorry, I don't know about the percentage, most of the homes are single family, so they're not really able to do multifamily properties or anything like that.
Yeah, and there's just no place to put even, you know, a 3-unit building if you wanted to build something.
True, exactly.
So how do they increase their rental properties where there is no space to put them,
Yeah.
this is an option.
Yeah. So this will allow people to. It will certainly allow more affordable housing to be, because there will be smaller apartments that are attached to people's homes, and you can rent them out for a year. It just won't be something that people can do for a minimum of for less than 30 days. The town did actually, they went back and forth a little bit on whether there should be a 30-day minimum, whether it should be an owner occupied requirement, and they kind of went back and forth a few times, and sounds like they settled as of right now on no owner occupancy requirement. However, you can't rent it out for less than 30 days. So I think this is a great thing for Kittery, because, or for any town really, to follow a similar guideline, because there's so many like multiple generational families that are living together now.
Yeah, and if you can put a little apartment on back, let's say your parents are snowbirds, they have a place in Florida, and they can come, and just stay right by you, literally in your backyard, in a little, addition that you put on for them. That's a great way to utilize your space.
Exactly. And if they're not renting it out, they can be there for less than 30 days if they want to be, but they just, I think that's great. I think it's great because it will allow for more people. I did want to just mention too, there's a grandfather clause which gives a 6-month grace period until the new ordinance is enacted. So any ADUs constructed under the current ordinance can be used as short-term rentals. So if you have a house in Kittery and you really badly want to rent it out short-term, build it before April 28th of 2020, and then you're allowed to do that. So
yeah, or rent it out to one Airbnb person a month. So even if they're not in it for 30 days, you can call it a 30-day rental, and they just used it for the weekend. They get it for the 30 days. It's still in the ordinance. You can be creative. There is a part of me that says, all right, I want to be balanced, but at the end of the day, you did buy the house, you did pay for the renovation. As long as you are not disturbing the peace of your neighbors, then, you have a right to use your space. Just a thought. Yeah, weigh in on that, listeners. This, as you can tell, we're like dancing around, but Jen and Dan are on opposite sides of the fence here. So I want to know what you guys think, clients. But I love a good debate. So there's always, something to learn from how the other side thinks. So let us know how you think on this topic.
Yes, please do. All right, so jumping into our next topic, we've talked a little bit about iBuyers before, and Zillow just had their Zillow Unlock conference I think it was in Las Vegas, and the CEO, Rich Barton, was talking a little bit about what the goal is for Zillow's iBuyer program. So
yeah, he says they're not flipping the property, and it looks like iBuyers on the outset, if you're going to pay a little bit less, in a guarantee price for it, and then Zillow's going to go and sell it, it might seem like it's a flip. He says they're not trying to get an artificially low price. They're not trying to take advantage of anyone who's like in a bad situation. Let's say they have to move, so they're going to use an iBuyer because it's a guarantee. His thought is they're looking to move the house as quickly as possible. So it's about how fast can you get out of your building. And they earn the money off the transaction fee. So ultimately, because the transaction is, as he says, it sits at the nexus of all of these adjacent markets that Zillow knows, because Zillow is this platform that's collecting information about how we shop all the time. They can actually use that data to make money for itself, not so much on the backs of the sellers, but
by doing a lot of them.
Yes.
Yeah. And Zillow, which of course we all know is still like an unprofitable company. They're still in the red all the time, which, I mean, they just, I guess it says in this article, they just closed a $1.1 billion funding session, and they were able to get that money in just a few days. Yeah, just 3 days, which shows that there's a lot of people who want to invest in real estate, in the real estate market, and in changing the real estate market. And Zillow, I think, is really trying to make the process easier for consumers. And they're experimenting with different ways of doing that, and now they're offering mortgages in some areas too. So there certainly is lots of different ways that Zillow is going to be making money from these transactions. However, they're coming on record and saying, they're not just trying to flip houses, but they're trying to help people, which is a pretty great a pretty great way to go about it, rather than just kind of being in it for the money too.
Yeah, and I'm a super big fan of innovation.
Me too.
And I'm behind what they're trying to do in streamlining things. The challenge is you can streamline the process, but then they have to monetize it in some way. But it all comes down to the same standard players in the game. You have title, you have a lender, for all intents and purposes most of the time, and you have to actually have a physical person to either market and sell your house, or to bring you around houses to see.
Yeah.
And you can't really get rid of those players. So to monetize, you actually have to ask those players to pay your service for some money, because you're not going to ask the customers, or they're not going to want to use it. So they're really kind of stuck, because they can't. Redfin tried to erase, everybody's going to have one job, you're only going to do the paperwork, you're only going to show people stuff, and it didn't quite work. So people are trying to figure out how to make this technology really make the process easy, because it's been so cumbersome because there are so many players.
And
but
it is, the real estate transaction is such a cumbersome process, and it takes such a long time, and there's so many intricate details that go into it. So it absolutely should be a smoother process, because most people that I talk to, a lot of buyers and sellers that I work with, say that selling their house and buying a house is one of the most stressful things that they ever go through. And so that's, our goal as real estate agents is to try to make it as stress-free as possible for them. And I think we do a great job of that to a point, but there certainly is a lot of room for improvement in how the process goes. And I think it'll be exciting to see how it goes. And I think that it will certainly change the real estate market as we know it today. But if it's better for the consumers, I think that's certainly a good thing.
Agree. And I think, it's great that they're clarifying the intention really isn't to flip your house, but it's as if you need to sell your house quickly at a decent price, look at an iBuyer.
Yeah.
That's a much clearer message to the consumer, who still was wondering, so
what is
why am I doing an iBuyer again? So more information on how this is all sussing out.
Yeah. All right, cool. So we'll be following this to see kind of what happens with it, but
yeah, it's evolving.
It is evolving.
Literally monthly, which is great to see.
Yep.
Because I do like innovation. It's just it is a challenging industry to innovate. We can use technology as tools, but to have the entire process streamlined is really a challenge. And then the company that does that, they need to monetize it, and that's where everybody's getting stuck.
Well, and this kind of segs quite well into our next article, which is talking about 8 of 10 consumers prefer to close transactions in person. So while we love technology, there's still a ways to go to use it in the right way for a transaction.
Yeah, and I actually think this is generational. My husband and I had a great conversation this morning about I read the Skim every morning as like kind of a wake up thing, and there's a new expression, and I'm trying see if I can think of it.
What is the Skim?
So the Skim is a collection of the hot topics of news, world news, national news. And they always throw in a little bit of interesting societal kind of stuff.
Oh,
and
okay.
they don't actually give you the story. They give you a summary, and then they link to other articles if you want to kind of dig into whatever's happened.
Oh,
so for me, it's a nice summary.
Sure.
And then if I want to go diving into further news, I'll go digging.
Yep.
So it has the second word. It has something to do with boomers, baby boomers. So there's a new phrase, and the idea is that the generation So I think it's Generation Z, which is so my children up through like early 20s. So that's how this all came about. They're in clashing with baby boomers for lots of reasons. So there was an article on this that I found interesting. But then I looked into the different generations, and they actually broke it out about how they bank. Who uses a bricks and mortar bank? Who views banking as a personal relationship? Who views it as like a transactional thing? And so when we decided to do this article today, it makes perfect sense to me that when you're trying to close on your house, still so many people do want to sit at a table. Even though we do so many other things, we'll even do virtual signing for all of the documents. But at the ending, tying it all together, we still have 3 generations that are still using bricks and mortar more than we think. It really isn't until the newest and the very end of the last generation that have really gotten away from bricks and mortar banking altogether. So I think we're going to see this change because it says 8 out of 10 consumers prefer to close transaction in person, which is different from the article we talked about, Notarize, which is part of Redfin, and they had 5,000 online closing, which is the new hot thing. No table, you don't have to take off from work or anything to close your loan, electronic, do it all. Which is great. I think we're going to see it flip. I think if we have this conversation in a year or two, it's not going to be 8 out of 10 closing at a table. And I think it's because how we bank and how these generational changes are. I think that's going to play an impact. But we picked this because we were surprised. That's 80% of people.
Yeah. But I think, as the article talks about, I certainly agree with that. I think it's going to be a bit of a change as time goes on. But the article mentions that talking about like a truly extraordinary consumer experience goes beyond digital. And I think, in a way, you're not really able to provide. I guess maybe to some people it's convenient to do a completely digital transaction, and for them that is an extraordinary consumer experience. But for others, being in a closing, talking with a closing with a closing attorney or a closing company or title company or whomever, and having them be knowledgeable about the process and explain things to them goes a long way to people feeling comfortable, because as we know, buying and selling a house is one of the largest, most important transactions of a person's life. So they want to feel taken care of. They want to feel like they're important, and that's what we try to give them, is to make everything seem really exciting, as well as making it smooth and convenient for people. So I think there's certainly lots of, and we were just talking about this, there are lots of ways for innovation in the real estate space as far as transaction process goes. It was interesting too, this article also mentioned that despite overwhelmingly wanting to put the final ink on deals face to face, 70% of these survey respondents also said that they would like a more digital process at the closing table. So, an iPad passing around and signing with DocuSign on your iPad,
that'd be fantastic.
Makes it a lot smoother. You don't have a stack of paper. Like, you literally go through almost a ream of paper at closing. That's a lot of trees.
Yeah, absolutely.
And then when they ask you at the closing, hey, do you want this emailed or mailed to you? Most people say emailed. Like, they don't want that stack of paper as well. So maybe just something like that as a slower innovation, rather than kind of going to fully digital closings. And of course, some people do like that and some people don't. So I think for a while we're going to have a mixture, but I think at some point you're right. People using bricks and mortar a lot less than they are now. And I certainly do at some times enjoy going into a bank and talking to people when I'm opening up my accounts or something like that. But other than that, I never go to the bank. And I'm the beginning of a millennial, so it's interesting to see the difference of the generations and stuff like that. So
yeah, and I like your idea about passing the iPad because it keeps all of the personal experience alive.
yeah, but it just still has that technological
speed.
Yeah, speed. Yes, you can press a button to sign rather than signing your name
Or correct things
1,000 times.
You know, as needed.
Mm-hmm.
So I love it. Great topics today, Dan.
Absolutely. So thank you so much for tuning in today. If you like this episode, please like us on Facebook, or you know what we need to do? We need to create a Jen and Dan Facebook page. We haven't done that yet.
We should.
Yeah, like us on Facebook.
Ideas aplenty over here
subscribe to the
at
YouTube.
Jen and Dan.
Subscribe to the YouTube channel and subscribe to the podcast. Please leave us a review. We'd love to hear from you about what you think about any of these topics. Yeah, thanks so much. This has been Cut to the Chase.
Yeah, have a great week, everyone.